Welcome to the Deep Dive. Today, we're going to be taking a deep dive into the world of Bitcoin. Now, I know you're tuned in because you have a keen eye for business and investing. And let's be honest, with Bitcoin nearing $90,000, it's hard not to be intrigued.
Yeah, it's definitely captured the attention of many, that's for sure. A lot of
Yeah.
people are trying to understand what's driving this surge and what it means for the future.
Right. So today, we'll unpack all of that, starting with Bitcoin's origin story, what makes it tick, and then we'll explore those what-if scenarios for the future. And of course, we'll delve into the potential risks. We want to equip you with a 360-degree view of Bitcoin.
Sounds good. Let's begin with the fundamentals then. At its core, Bitcoin is a decentralized digital currency, meaning it operates without a central authority like a government or bank.
Okay, so no Federal Reserve calling the shots with Bitcoin? I'm already intrigued. But how does that actually work?
It's all built on a technology called blockchain, which you can think of as a kind of digital ledger. But here's the key. This ledger is distributed across a network of computers around the world. So instead of a single entity controlling everything, every transaction is verified and recorded by multiple parties. This makes it extremely difficult to manipulate or counterfeit.
So it's like a massive shared spreadsheet that everyone can see, but no one person can change. That's pretty clever in terms of security and transparency.
That's a great way to put it. And it's this decentralization that attracts many to Bitcoin. It removes control from traditional financial institutions. And for some, that's a very appealing prospect.
I can see how that would resonate with folks who are looking for alternatives to the existing financial system. But let's talk about that price surge. I mean, Bitcoin has been around for a while, so why this sudden climb towards $90,000?
There are several factors at play. One significant driver is the increased institutional adoption we've seen. Big names like Tesla, Square, and PayPal have started integrating Bitcoin into their operations. When major players like these enter the market, it injects a degree of legitimacy and, of course, a lot of capital.
There's almost like a ripple effect. These big companies making moves legitimizes Bitcoin in the eyes of others, potentially attracting even more investors, both large and small. It's like a snowball rolling downhill, gathering more and more momentum as it goes.
That's a good analogy. We've also seen growing interest from retail investors. Everyday people hearing about Bitcoin's potential gains are eager to get a piece of the action. And then, of course, there's the fear of missing out, FOMO. Social media and news headlines are amplifying the buzz. And it becomes hard to resist when everyone seems to be talking about Bitcoin.
We've all been there. That feeling of, I don't want to be left behind, is a powerful motivator, especially when it comes to investing. But before anyone throws their life savings into Bitcoin, it's important to understand the full picture, right?
Absolutely. While the potential for gains is enticing, it's crucial to approach Bitcoin with a balanced perspective. We'll delve into the risks later on. But first, let's take a step back and see how Bitcoin fits into the broader landscape of cryptocurrencies. Because it's not the only game in town anymore.
Right. I've heard about other cryptocurrencies like Dogecoin and Ethereum. What's the difference between them and Bitcoin?
It's a diverse ecosystem, each with its own characteristics and purpose. Take Dogecoin, for example. It started as a joke, inspired by an internet meme. Unlike Bitcoin, which has a limited supply, Dogecoin has an unlimited supply and is often used for microtransactions and tipping online.
So it's more about online communities and fun, while Bitcoin is playing in the big leagues.
You could say that. Then you have Ethereum, which is quite different. It's a platform that allows developers to build decentralized applications using smart contracts. These are essentially self-executing contracts that automate complex transactions.
So Ethereum is more than just a currency. It's like a platform for building entirely new ways of doing business. I can see why that would pique the interest of someone who's business-minded.
Yeah.
It opens up all sorts of possibilities.
Exactly. And that's just a glimpse into the diversity of the crypto market. But let's zoom back in on Bitcoin. I'm curious to hear what you think about its future. What are some of the factors that could shape its trajectory? And what are those potential what-if scenarios we talked about earlier?
It seems like continued adoption is crucial. If more businesses and individuals embrace Bitcoin for payments, investments, and everyday transactions, that would certainly boost its value and legitimacy. But then there's the regulatory landscape. Governments are still figuring out how to approach cryptocurrencies, and that could have a major impact depending on how things shake out.
You're hitting on some key points. Positive regulation could attract more mainstream investors and businesses, providing clarity and consumer protection. On the other hand, restrictive measures could stifle innovation and limit adoption.
It's a tightrope walk for policymakers. They want to foster innovation while also safeguarding against potential risks. And speaking of risks, we can't ignore the fact that Bitcoin is notorious for its price volatility. It's been a roller coaster ride so far, and that can be nerve-wracking for investors.
Volatility is definitely a factor to consider. Bitcoin's price swings can be dramatic, and anyone considering investing needs to be aware of that risk. It's not a get-rich-quick scheme and requires a strong stomach for potential dips.
So what are some of the other risks and challenges that we should be aware of? I know there's been some talk about Bitcoin's use in illegal activities, for example.
That's an unfortunate reality. Bitcoin's anonymity, while appealing to some for privacy reasons, has also made it attractive for those engaging in illicit activities on the dark web. We're talking about things like money laundering and transactions involving illegal goods.
That certainly casts a shadow over Bitcoin's reputation. It seems like this technology, like many others, can be used for both good and bad purposes.
Exactly, and it's something that law enforcement agencies and regulators are grappling with. How do you strike that balance between protecting individual privacy and preventing criminal activity in a decentralized system? It's a complex challenge.
Well, we've covered a lot of ground in this first part of our deep dive. We've explored Bitcoin's origin story, the factors driving its recent surge, and we've even started to scratch the surface of some of the potential risks and challenges. I'm eager to delve deeper into those what-if scenarios for Bitcoin's future and to understand what this all means for someone like you, our listener, who's interested in business and investing.
I'm ready to dive deeper as well. There's a lot more to explore, and I think our listener will find it both fascinating and valuable. So picking up where we left off, let's delve into those potential futures for Bitcoin. It's a bit like peering into a crystal ball, but by examining the key factors at play, we can get a better grasp of the possibilities.
Right. We talked about adoption and regulation as major influences. What are some of the scenarios that could unfold depending on how these factors evolve?
One scenario is widespread adoption. Imagine a world where Bitcoin becomes a mainstream payment method, accepted by businesses large and small, both online and offline. If that happens, its value could skyrocket as demand surges. We could even see it challenging traditional currencies in some contexts.
That's a bold vision, but I can see how it's possible as more people become comfortable with digital currencies and the technology becomes more user-friendly. It could seamlessly integrate into our daily lives. Think about how we've embraced mobile payments in recent years. Bitcoin could follow a similar trajectory.
Precisely. And this widespread adoption scenario is closely intertwined with regulation. If governments create clear, favorable regulations that foster innovation and protect consumers, it could create a more stable environment for Bitcoin to flourish.
So a regulatory framework that strikes the right balance between encouraging growth and mitigating risks could be a game changer for Bitcoin. It would give businesses and investors the confidence to fully embrace this technology.
Exactly. But let's flip the script for a moment. What if regulation takes a more restrictive turn? Some governments might see Bitcoin as a threat to their control over monetary policy, or worry about its potential use in illicit activities.
That's a valid concern. We've already seen some countries crack down on cryptocurrencies, imposing strict rules or even outright bans. If that trend continues, it could significantly hinder Bitcoin's growth and limit its potential. It's a reminder that the future of Bitcoin, at least in the short term, is very much tied to the decisions of policymakers around the world.
Absolutely. And there's another scenario we need to consider: the emergence of a central bank digital currency, or CBDC. Many countries are exploring the possibility of creating their own digital currencies, backed by their central banks.
So it's like a digital version of the US dollar or the euro, issued and controlled by the government. That's interesting. How would that impact Bitcoin?
It's hard to say for sure, but some argue that CBDCs could pose a challenge to Bitcoin. They would offer the convenience and security of a digital currency, while still being backed by the full faith and credit of a government.
It's like a hybrid approach, combining the benefits of digital currencies with the stability and trust associated with traditional financial institutions. That could be a compelling alternative for some people.
It certainly could, but on the other hand, proponents of Bitcoin argue that its decentralized nature is its greatest strength. They see CBDCs as a continuation of the centralized control that Bitcoin was designed to challenge.
So it comes down to a fundamental question about the nature of money and who should control it. Do we want a system where governments and central banks retain ultimate authority? Or do we envision a more decentralized future where individuals have greater autonomy over their finances?
That's the crux of the debate, and it's a debate that will likely continue for years to come. But regardless of how the regulatory landscape evolves or whether CBDCs gain traction, there's another force at play that could shape Bitcoin's future technological innovation.
Okay, let's talk about that. What are some of the technological advancements that could impact Bitcoin's trajectory?
One area of development is scalability. Currently, Bitcoin's network can only process a limited number of transactions per second, which can lead to delays and higher fees, especially during periods of high demand. Several solutions are being explored to address this, including the Lightning Network, a second-layer technology that aims to enable faster and cheaper transactions.
So if they can overcome these scalability hurdles, it would make Bitcoin much more practical for everyday use. Right? Imagine being able to buy a cup of coffee with Bitcoin just as easily as you swipe a credit card.
Exactly, and there are other innovations in the pipeline, like improvements to privacy and security, and the development of new applications built on the blockchain.
It's a dynamic field, constantly evolving. It's hard to predict what the next breakthrough will be, but it's safe to say that technological advancements will continue to shape Bitcoin's capabilities and potentially expand its reach.
Agreed. And as we consider these various scenarios, widespread adoption, regulatory shifts, the rise of CBDCs, and ongoing technological innovation, it becomes clear that the future of Bitcoin is multifaceted and full of uncertainties.
It's not a simple will it succeed or fail question. There's a wide range of possibilities, and the outcome will likely depend on a complex interplay of factors.
That's a key takeaway. It's important to approach Bitcoin with nuance and a recognition of its complexities. But as we've been focusing on the potential upsides, it's crucial to acknowledge the potential downsides as well.
You're right. We've talked about the risks associated with volatility, regulation, and the emergence of CBDCs. Are there any other potential drawbacks or concerns that we should address?
There are a few key ones. First, let's revisit the issue of security. While blockchain technology is inherently secure, the exchanges where people buy and sell Bitcoin, and the digital wallets where they store it can be vulnerable to hacking and theft.
So it's like any other valuable asset. You need to take precautions to protect it from those who would seek to steal it. What are some steps individuals can take to mitigate these risks?
Choosing reputable exchanges and wallets with strong security measures is essential. Look for features like two-factor authentication, which adds an extra layer of protection to your account. And never store large amounts of Bitcoin on an exchange. Instead, transfer it to a personal wallet that you control.
So it's all about being proactive and taking responsibility for your own security. Don't rely solely on third-party platforms to protect your assets. And speaking of security, there's also the issue of scams, right?
Unfortunately, yes. The world of cryptocurrencies has attracted its fair share of scammers and fraudsters. They use various tactics, like phishing emails and fake websites, to trick people into revealing their private keys or sending them Bitcoin.
It sounds like navigating the Bitcoin landscape requires not only financial savviness, but also a healthy dose of skepticism and digital hygiene. Don't click on suspicious links. Double-check URLs. And never share your private keys with anyone.
Exactly. Vigilance is key. And another potential downside we need to address is the environmental impact of Bitcoin mining.
Right, we touched on this earlier. Can you elaborate on the concerns surrounding Bitcoin's energy consumption?
As we discussed, the process of mining Bitcoin requires a massive amount of computational power, which translates to significant energy consumption. This has raised concerns about Bitcoin's carbon footprint, especially as much of that energy comes from fossil fuels.
It's a valid point. In a world grappling with climate change, the sustainability of technologies like Bitcoin is under scrutiny. Are there any efforts underway to address this issue?
There are. Some mining operations are transitioning to renewable energy sources, like solar and wind power, to reduce their reliance on fossil fuels, and developers are exploring alternative consensus mechanisms, like proof of stake, that require significantly less energy than Bitcoin's current proof-of-work system.
So there's a push towards greener Bitcoin, so to speak, but it remains a challenge, and it's something potential investors should consider. It's important to weigh the potential benefits of Bitcoin against its environmental impact.
Absolutely. And I think that leads us to a broader point about responsible innovation. As we embrace new technologies, we need to be mindful of their potential consequences, both positive and negative.
That's a crucial reminder. Technological advancements should serve humanity, not harm it. We need to find ways to harness the power of innovations like Bitcoin, while mitigating their potential drawbacks.
I couldn't agree more. And as we wrap up this deep dive, I think it's worth reflecting on what all of this means for our listener. We've explored Bitcoin's potential futures, both bright and uncertain, and we've delved into the risks and challenges. So what's the key takeaway for someone who's business-minded and interested in investing?
Well, I think the key takeaway is that Bitcoin is a powerful technology with the potential to disrupt traditional financial systems and create new opportunities. But it's not a guaranteed path to riches, and it comes with its fair share of risks and complexities. Anyone considering investing in Bitcoin needs to do their research, understand the technology, weigh the potential rewards against the risks, and approach it with a balanced perspective.
Well said. It's about being informed, being cautious, and being aware of the constantly evolving nature of this space. The world of Bitcoin is dynamic and complex, and it requires a willingness to learn, adapt, and stay ahead of the curve.
It feels like we've barely scratched the surface, but at the same time, we've covered a lot of ground. What stands out to me is that even if someone decides not to invest in Bitcoin, the technology behind it, this whole blockchain concept, seems like something businesses can't afford to ignore.
I completely agree. Whether Bitcoin itself becomes the dominant cryptocurrency or not, the underlying technology is poised to disrupt various industries. We're already seeing blockchain being explored for supply chain management, secure record keeping, voting systems, and even digital identity verification.
It's almost like the internet in the early days. People weren't quite sure what to make of it at first, but it ended up revolutionizing everything. Blockchain could have that same transformative power.
That's a great analogy. And for business leaders, it's crucial to be aware of these emerging technologies and to explore how they might be applied to their specific industries. Those who are early adopters and innovators could gain a significant competitive advantage.
So it's not just about investing in Bitcoin itself, but also about understanding the broader implications of blockchain technology and being prepared to adapt and evolve as the landscape changes.
Precisely. And one of the most fascinating aspects of blockchain is its potential to empower individuals. Imagine a world where people have more control over their data, their finances, and their digital identities.
It's like a shift in power dynamics. Instead of relying on large institutions and intermediaries, individuals could have more autonomy and ownership. That's a powerful concept.
It is, and while there are still challenges to overcome, the possibilities are exciting. Blockchain could foster greater transparency, accountability, and efficiency in various aspects of our lives.
As we wrap up this deep dive, is there a final thought you'd like to leave our listener with?
I'd say this: whether you decide to invest in Bitcoin, explore the applications of blockchain in your business, or simply observe from the sidelines, one thing is clear: the world of digital finance is rapidly evolving. Stay informed, stay curious, and be prepared to embrace the changes that lie ahead.
Well said. It's been a fascinating journey exploring the world of Bitcoin with you. To our listener, we encourage you to continue learning and exploring this dynamic space. The possibilities are truly limitless.